Tom Bowley, Chief Market Strategist here at Earnings Beats. Hey, good morning, everybody, and welcome to this last day of 2024. It is Tuesday, December 31st, 2024. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats. It's a pleasure to be with you guys and gals today. Unbelievable that the year's almost over. I mean, it seems like we've been, just kind of getting at it here in 2024 and the year's over. I think as you get older, the years seem to just go by a little bit faster and faster, but certainly a pleasure to be here. I know during the holidays here, we haven't talked a whole lot. The market seems to kind of be in a sideways trading pattern to me right now as we close out the year. Normally, we do have a very strong period that goes from December 21st through the 31st. That's kind of in flux, I guess, a little bit for 2024. I think it was 58 of the last 74 years we've seen this period go higher. But 16 times it's gone lower, so it's not a guarantee. It's just a trend, a more bullish trend that we're normally accustomed to. But this period seems to be a little different, just kind of going sideways. We do have one more session here today to see if maybe we can have a decent day, finish in the positive territory. We still are up from the October 27th close in 2024. So that bullish period that we talk about from the October 27th close all the way through the January 18th close, that period is up. Not a whole lot, but it is up a little bit. And we'll see if we hold on to those gains through January 18th. One thing that we can now start talking about as we move into January is the January effect. I don't know how many of you are familiar with that, but if you've been around us for a while, you probably know it pretty well. But it's like the old Wall Street adage goes, it's as January goes, so goes the rest of the year. So the tendency is the stronger that January is, the stronger the balance of the year is. And the key word there being balance of the year. Doesn't include January. So if January goes up 10%, that puts it in among the best Januaries of all time. And as a result, or at least since 1950. And then what that would mean is that typically the other 11 months would do much better than average. So it's not, obviously if January gets off to a good start, that helps the year. But when we talk about the balance of the year, we're not including January. So if January is a strong month, that tends to precede a very, very strong balance of 2025 if we do get off to a good start. And the flip side can be said as well, though. If we get off to a weak start, we have a January that's maybe only up 1 or 2% or even down for the month, that tends to lower expectations for the balance of the year. And it's, again, not a guarantee, but it's certainly a tendency that we all need to be aware of. So that's something I'll be talking about more in January, especially as we get closer to the end of January and we start to see how the first month of the year unfolds. But right now, we've still got to wrap up 2024. This is it. I do want to make sure I wish everyone a happy new year. I'm looking forward to 2025. I think it'll probably be a challenging year. But anyway, we'll get into more of that as we as we move into Market Vision 2025, which will be this Saturday. I'll talk more about that a little bit later in the show. And then, of course, as we get into January and see how the earnings go, how the reactions to the earnings go, and then what the heck the Fed does. And then that's as much of a guess as it is anything else, because it seems like they tend to change their tune every other month. Anyhow, let's go ahead and take a look at what happened yesterday, the next to the last day of 2024, if you will. And if you look at the action, we did finish down. So that was a negative, but we gapped down quite a bit. So we rallied most of the day after gapping down and then moving lower in the first 20, 30 minutes. We started to see a little bit more strength coming into the market. So we cut into those losses, but we did still finish with losses yesterday. So the mid cap held up the best, dropping 0.69%. Then we had the Russell 2000. I don't know if I can get try and get it all on one screen here. Close enough. Russell 2000 dropping a little bit more than 0.75%. The Dow Jones Transports down 0.9%. Industrials down almost 1%. S&P 500 over 1% lower. And the Nasdaq 100 was the laggard yesterday among these 6 indices, dropping more than 1.25%. If we move into the sectors, we had energy just barely down, actually flat on the day. That was the best performing sector. Utilities, real estate, financials, industrials. I mean, as I look at that, I think value much more so than growth. Then down at the bottom, you can see discretionary actually was the worst performer. But we did have 7 of the 11 sectors drop more than 1% on the day. So clearly it wasn't a very good day. But like I said, most of that weakness took place in the first 30 minutes of trading. And then we started to see a little bit of a recovery through the balance of the day. And then right at the very end of the day, we went back down a little bit. As far as futures go this morning, I was just looking a few minutes ago. The Dow right now is up about 0.25%. We've got the Spider, which is up about 0.3%. The QQQ, which tracks the Nasdaq 100, up also about 0.25%. And then the IWM is currently up about 0.6%, actually almost 0.2%. So all in all, looks like, the recovery yesterday, albeit a little bit of a drop at the end of the day, seems like that momentum may carry over into the open today. And then we'll see what happens. I mean, if we get a nice strong day today, where we can go up throughout the trading session, I think that would bode really well for us, maybe to start the year. If, on the other hand, we gap up and then we have the sell-off, I think things could be a little bit more difficult. So we'll just see how it goes and roll with the punches. I try not to put a whole lot of stock, no pun intended, but I don't put a whole lot of stock in what happens here at the end of the year. Normally, it's light volume. Normally, we see some fractional moves to the upside each day or many of the days. And so there's really not a whole lot to be read into at this point. But we'll start off, and the market does tend to give us some pretty strong signals at the open at the start of a new year. So come Thursday and Friday of this week, we may be getting some signals as to how the beginning of 2025 may go. Moving on to the S&P 500, you can see, there's still this head and shoulder top potentially that's in play. I'll just kind of zero in over here on the right side of the chart. And so we had the gap up after the presidential election in early November. Once we established what looks like at this point maybe to be a left shoulder, we then fell back into the neckline, which was right at about the top of gap support. Went up, put in a new high. That's the potential head of this head and shoulder pattern. Went all the way back down, and you can see it was a pretty big day there. Volume, I think it increased. Well, volume increased there, but then we came back the very next day. Nice recovery. But that took place right at this potential neckline. And the neckline is downsloping slightly. So not a guarantee of anything, but to me, it's a little bit more of a bearish setup for this pattern if it breaks. Because a lot of folks will look at upsloping necklines. And the problem is when you break that upsloping neckline over here, you still haven't lost the support. So I tend to think any of those breakdowns fail to hold or fail to establish a downtrend before they reverse back to the upside, because they never really put in a lower low to establish that move to the downside. So I don't like upsloping necklines. I find that if they're equal, if the neckline is equal, when you break down, you're breaking down both lows. Also, if they're downsloping, clearly, when you break the downsloping line, you've taken out prior lows. So I think that's a little bit more of a bearish setup. I would also maybe offer that if we do get a false breakdown on this head and shoulders neckline break to the downside, we do need to pay attention to the gap support from that big gap up from the election. So we've been watching the top of gap support for the most part. And we did have a really nice reversing candle right at this area. But can't forget that there is the bottom of the gap in the event that we do break down. A reversal there would be something I would be maybe somewhat encouraged by. The Nasdaq 100, not sure why this is. Let's see if we can. There we go. Yeah, we came back down. We got the 50-day moving average and price support both just below that 21,000 level. The 50 days at 20,956, and that earlier price support area, which was that reversing candle. I think it was a bullish engulfing candle on the S&P 500. Here on the Nasdaq 100, it was actually a piercing candle. So it's kind of a wannabe engulfing candle. Just doesn't quite make it. So I find bullish engulfing candles to be more bullish, but these are bullish as well. When you get a nice reversal and you get volume, you get a gap down off of an uptrend and then come back up and finish in the top half of the prior day's candle body. That is a piercing candle, which is a reversing candle. And then you've got, like I said, bullish engulfing, which completely engulfs the prior day's candle body. When I see those and I have big volume and it's off of a downtrend, I tend to think more bullishly about those. So anyway, this gap open was at 20,939 and the 50 days at 20,955. And we finished at 21,197. So we have roughly about 1% or so, maybe just a little bit more to where we get down to this key area of support. So that's what I'd be watching for on the NASDAQ. Right now, we're in an uptrend and we're just consolidating it. I mean, I don't see anything bearish on this chart other than we've had a couple more red, big red days than what we had grown accustomed to. Prior, we had seen a lot of hollow candles and we really hadn't seen any real big red candles until this one that we saw back on December 18th. And that one, we had dropped from the open near 22,000 all the way down to 21.2. So it was close to 800 points, 750 to 800 points on the NASDAQ drop back on December 18th. So anyway, that's the way I see the NASDAQ again, sideways consolidating, not really seeing a lot of breakdowns. The IWM is a little bit different, though. I do see, areas of support that we've lost. And so far, we haven't been able to get back up above that 20-day moving average. So I'm a little bit more skeptical right now on the small caps. And as many of you know, I've been a big fan of small caps. I still look at the fundamentals and think, hey, small caps should benefit from this. It's not like the additional rate cuts are not going to happen, or at least based on what the Fed's saying right now. We cut the number of rate cuts from 4 to 2, but we're still expecting 2 rate cuts. Now, we did go down yesterday and put in a low beneath the prior low. At least I'm pretty sure we set a new low, which was like a 6-7 week low. So it wasn't a small deal. Back on December 20th, we hit a low of 218.07. Yesterday, we hit a low of 217.85. But we rallied off of it. So we had a false breakdown. But here's where things get kind of tricky. So number one, I like the false breakdown and recovery. So short term, I find that to be a little bit bullish. However, we've now got this PPO deep. Now, it's only the daily chart. We'll look at the weekly chart in a second. But the daily chart's deep into the red area, meaning short-term momentum is on the bearish side on a daily chart. So short-term, the bears are in control right now. Another breakdown below support, and they would be further in control. If we get back up to the 20-day moving average and fail and move back down to a new low, to me, that's a trend to the downside. So even though, excuse me. So even though I have that more bullish, longer term view, looking at a weekly chart, which again, I'll show you in just a second, the daily chart has to turn a little bit to confirm that the weekly chart is still the one in charge. So we don't really know right now if the short-term chart is going to flip the long-term chart, or if the long-term bullish chart suggests that this isn't going to last. But we don't know the answer until we see what happens here on the daily chart. So for me, a move back through the moving averages tells me that the longer-term weekly chart is in charge. We're bullish, and this was nothing more than a pullback. A failure to do that, though, moving up to the 20 or 50-day moving average and then rolling back over to a new low, then would maybe bring some things into question on the longer term chart. So right now, I think you could argue that the long-term chart remains in an uptrend as long as we're above the 210 area. I mean, the 50-week moving average is 211. So that's an area I would look at to the downside. The other thing maybe that you can do is consider a trend line. So the trend line, I think, is pretty well set in terms of the highs. I mean, I would say it's right along maybe there. What about right? Let me draw this just a little. I'm trying to connect candle bodies. Then drag this line down the exact same slope. And if we connect that candle body from early August, that also brings us in just above that 210 level. So now, I mean, we could drag it all the way down to this low, but it seems like we've been, we had a pretty important low in August. So at least for right now, I would probably be looking at that level right there, which rides right along with the 50-week moving average. So, the IWM I'm really interested in because I do think fundamentally we set up for a really good year coming up in the IWM, but it's not showing right now. It showed back in July, and now with the change in the Fed cutting rates or cutting the number of rate cuts, small caps have been underperforming again. Like I said, I want to give it a little bit of room. I don't want to make a call too quickly that, that other earlier call is off. But I also don't want to completely disregard what's been happening here over the last month. Since the end of November, we have seen a lot of rotation away from small caps and into the larger caps, into the QQQ and so forth. And the way you can see that, let me get out of here. So all I have to do, let's go back to a daily chart. And then if I pull up the IWM QQQ, I mean, here is that rotation out of small caps and into the large cap. Now, I normally would run the IWM versus the spider. But if the IWM can outperform the QQQ, which has been the strongest index throughout this secular bull market, that would really start to tell me that we've got some strength here. So that's why I kind of use it against the QQQ. But you can see we had multiple bottoms in here right around 0.435. Zero in here a little bit. So we had a couple bottoms. It looked like we were going to try to reverse right here. And then we went down to a new low and we're still sitting below this. However, we're still up from where we were in July. So since July, since we really got the CPI report that I believe sent the message to the Fed that they needed to start lowering rates. That's what transpired here in July, transpired again throughout November. Everything was moving more towards the small caps, and which you would expect would benefit more from lower rates in the year ahead or a couple years ahead. And I still believe that fundamentally, but I want to see it now on the charts, because if the charts disagree with me, I'm going with the charts. So right now we've had a very rough last 5 weeks. And so my question is, we have seen a little bit of a turn here over the last couple of days. I pointed out with futures that, we've got the IWM tracking a little bit ahead right now, 0.7%. Potential rise here on the IWM. We still got another 11, 12 minutes to go till the opening bell, but it looks like small caps are going to get a little bit more relative strength today. So this is another thing I would be looking for. Get back up above that 20-day moving average, because if you do that, you're back above these prior support levels, which are now relative resistance levels at 0.435. So the 20 days back down to about 0.438. That's what it looks like here. And so if we can get through both of those, it would at least begin to look like small caps are ready to make a move. Now, I will warn you, the small caps don't generally like the first week of January for whatever reason. Other indices tend to do much better. I don't know if that's going to hold true here, but I just wanted to point it out. There is a tendency for small caps to underperform at the beginning of a year. It's just a tendency, but I wanted to point it out. I do try to remain objective. Some people think I'm just always bullish. Anyone who was with us back in 2022, I think, knows the difference. Anyhow, let's go on and look at the mid caps. And I'm spending a little bit more time going through these indices because we haven't really had a whole lot of gatherings or reports. A lot of our members, I haven't done a daily market report yet. Probably try to do a real brief one or something today. And then we'll get back into our regular schedule after the new year, and especially after Market Vision 2025, which is this Saturday. Again, we'll talk about that in just a minute. But anyway, mid caps look a lot like small caps, breaking down below the moving averages, unable to get back up even and test the moving averages at this point. But we did have a low that kind of comes in right near support yesterday, and we reversed off of it. So like the small caps, mid caps look like they're still okay from a longer term perspective, and they're trying to hold on to support on the short term. Yeah, here's the, and you can see pretty much the same thing, just a channel going up. And I'll show you the S&P, which clearly is in an uptrend. A lot of, still lower PPOs here. So it seems like maybe a little bit of momentum's been waning over the second half of the year. And that could be a good thing, especially if money rotates small caps. The Nasdaq 100, same thing, just, really nice uptrend on the weekly chart. So it's hard to argue any of those things, but small caps and transports have been going kind of hand in hand along with the Dow. And so let's pull up the transports, get it on a regular chart here, and you see pretty much the same thing, maybe even a little bit worse on the transports because we've clearly lost a lot of different support levels. Now we're down here testing about a 3-month support level around 15.7 or so. And that was, that's even below some of these tops that we were looking at earlier in 2024. Remember, we were up talking about 16.2, 16.4, right in that area. We needed to get through. We got through. I would have thought like kind of last case scenario would have been, or worst case scenario would have been holding that 16.2 level, but we've gone below that. So again, and the volume trends are not great. So I can look forward and see rate cuts and talk bullish things, but we got to pay attention to what's going on in the charts. And right now, short term, areas like the transports, the mid caps, the small caps, even the Dow, Dow was doing really well. Remember, we got up over 45,000 to open December. Now we're back down to 42.6, 42.5 and change. So we've lost a lot of ground on the Dow in December, just like with small caps, mid caps, and transports. So that's kind of the recap, if you will, of all the major indices. Before I wrap up the show, I do want to just talk about, though, a little bit the Market Vision event coming up. So this is a big event. I mean, this is probably the most thorough that I look at the market at any point during the entire year. I'm going to be going in, I'm going to be looking at the commodities, I'll be looking at the dollar, I'll be looking at sentiment, I'll be looking at all the different areas like transportation, the sectors, industry groups. I'll be looking at the channels. I'll forecast the S&P 500, where I think it goes throughout the year, where we end at the end of the year. I can tell you the last 5 years, I was bullish 4 times. The market went up 4 times, those 4 times. I was bearish 1 time going into 2022. Market went down in 2022. The signals that I go through, it's not just what's going on in the market. It's also what's going on under the surface, and especially in areas like sentiment. Sentiment, it plays a huge role in the market, whether you believe it or not. To me, it just kind of makes sense that when when sentiment is extremely bearish, you have no more sellers. I mean, you're running out of sellers. When everybody is so bearish, all the funds, hedge funds, portfolio managers, and then all the individual investors through the equity only put call ratio. I mean, when everything is bearish, market has almost nowhere to go but up. And when everything is bullish and we get opposite sentiment readings, then you're getting to a point where the market's getting saturated with buyers. Doesn't mean the market doesn't keep going up, but you have to worry about maybe the extension of current gains. Like this year, S&P 500 up nicely, 25%, or I don't even know where we are right now, but it's been a great year for the S&P 500. Is that going to help or hinder 2025? Well, something I'm going to be talking about. Anyhow, if you go over to earningsbeats.com, we do have an area right here, Market Vision 2025. Click on that, and it will bring up the live virtual conference that we're going to host on Saturday at 10 a.m. Dave Keller is going to be joining me. So if you're a Stock Charts fan, you probably know Dave. Dave and I have been friends for a number of years. We've worked together, but sometimes we kind of look at the market a little differently. And I think we're probably going to look a little differently at it for 2025. So I think it's going to make for a very interesting discussion with Dave. But anyway, this is going to start at 10. It'll probably go for 3-4 hours. I mean, like I said, it's a very thorough event. You don't have to be there live. If you register for the event, you're going to get the recording, so you can watch it at your leisure. So don't think that, oh, I can't be there this Saturday. No need to sign up. You really should sign up. And by registering for the event, and there is a cost, but we're going to throw in a free annual membership with your registration. That's a $997 value. And if you look at it on a monthly basis, you pay $147 a month. That's like $1,764 or something like that. If you were to pay monthly over the course of the year, there's going to be no cost for an annual membership if you register for this event. So anyway, but scrolling down, I just wanted to point out there's Dave Keller. So Dave will be joining me from the Redmond, Washington area. He'll be getting up extra early, I guess, to join us, which is awesome. But you can go through and just read. You can read about some of the results, some of the predictions I've made in prior years, but just make sure you check this out. If you're on a mobile device, there's a scan that we have, a QR code that you can scan. And just, holding your phone up over that, scanning it with the photo or whatever, that takes you to the landing page on your mobile device. So we try to make it easy for you to sign up there as well if you don't use a laptop. So please check that out. I think it's going to be the event of 2025. We still got a lot of confusing signals coming in right now, and we're going to try and straighten them all out for you and give you what we believe is the more likely path of stocks in 2025. All right, we have just a couple minutes here. Maybe, how about we take a look at the Nasdaq 100 and what's been working of late? Let me see if I can find that first. There we go. Nasdaq 100 components. So maybe what we'll do here is, why not do a year to date? What's been going on for the entire year? We've complained so much. Everyone asks me, what's wrong with NVIDIA? What's wrong with NVIDIA? NVIDIA, is doing nothing. It all comes down to perspective. If you followed NVIDIA and watched it go up through the first half of the year and then decided to jump in, it's been nothing. It's been sideways. It's done nothing for you. I mean, the year to date's up 177%. But if we go back 6 months, and let's see, where is Netflix? Let's go by symbol. So over the last 6 months, Netflix up 11%, 177% for the year, but only 11% over the last 6 months. And then, if we do 3 months, and go down and take a look at it again, 13%. If we do 1 month, so just month of December, and we go down, we're down 0.5%. And so over the last month, you can see Broadcom's been the best. Tesla's been strong. Marvell, Lululemon starting to come back. Nice uptrend there that we've seen. In fact, we got 1 minute. Why don't we take a look at Lulu? Google's come back and looks much better now. So let's look at these two, and then we'll wrap up today's show. So here's Lulu. You can see the uptrend that has begun off of this downtrend. But if you look long term, this is a solid stock. And so when it does pull back, and you see RSIs on really solid long-term stocks, when you see those monthly RSIs go down in the 40s, in this case, we might have even slightly moved into the 30s. That's generally a good time to get into stocks that have great long-term value or that have great long-term uptrends. So there's Lulu, and Google was the other one. On the monthly chart, you can see it just breaking out to all-time highs back in 2022, 2023. Notice where that monthly RSI went, down into the 40s. So if you find good stocks that are just struggling for a while, and something that comes to mind to me would be something like a Starbucks, where we went down to 70, hit some price support here. Monthly RSI was 40. It's still only at 49.72. And it's sideways consolidating. Maybe Starbucks with its, 3% yield or whatever it has now. Maybe Starbucks would be something to think about. But anyway, that is basically it. So this is the last show for me for 2024. Can't believe, like I said earlier, that the year is come and gone again. Not getting any younger. Probably all of us can relate to that. But it does seem like the years go by faster. I remember, and you also can probably relate to this. When you were in school, it seemed like the school year would never end. And going through 12 years of school seemed like it was a lifetime. But man, once you get out of school, you start, you get a job, then you have maybe get married and have a child or two or three or four or whatever. Life gets a little more complicated, and then the clock just kind of spins. Anyway, 2024, it's almost done spinning. So I will just leave you with that. I do want to wish everybody a great year ahead. Happy New Year. Hope it's a healthy and prosperous year for everyone. And, hopefully we'll have a good market in 2025. We'll see. Anyway, take care. And again, Happy New Year, everyone. Happy trading.